What do you do, Kanekis? Welcome back to the channel. I hope you're all doing well. So, price everything in gold. In this one, we're going to be looking at the fact that you should be pricing everything in gold to remove the illusion of fiat currencies. This not only includes food and everyday items, but also the stock markets, the S&P 500, the Nasdaq, Dow Jones Industrial Index, FTSE 100. That's the, I believe that's the British stock market. And I'm going to show you why. I'm going to show you why you should be pricing these things in gold. But before we get into it, please hit the like button, subscribe as well if you're new and you haven't already. Please be sure to share this video out with people. I believe it is very important that people find this out. So let's get into it. Looking at this chart now, this is the price of gold in the US dollar. I'm starting with the dollar because the dollar was the last currency that was pegged to gold. Unfortunately, in 1971, August 15th, Richard Nixon decided to temporarily suspend the convertibility of the dollar into gold. So unfortunately, that meant that all currencies around the world at the same time also became fiat currencies. They are now backed by nothing. So you can see, looking at, this chart goes all the way back to 1938. And you can see that the gold price is constant, but it increases to about $35. That was the first sin of the US government. They pretty much took the public's gold coins. They asked them to bring it in. They confiscated it basically, and then they revalued gold. The second sin was in 1971. This is where the dollar basically became free floating against gold. And you can see the gold price has constantly, well, not constantly, but for the most part, gone up and to the right. Now, you might be thinking, why is gold increasing in price? An ounce of gold is an ounce of gold. And you're right, an ounce of gold is an ounce of gold. It should not be increasing in price. So what does that mean? It means that the dollar is losing value. The dollar is going down in value. It is not gold reaching all-time highs. It is the dollar reaching all-time lows. To illustrate this, I will show you a chart of gold inversed. So this, ladies and gentlemen, is the value of the dollar. Zero. It is zero. Price in gold, it is zero. It gives you what? How many zeros is this? Oh, about five? About 5 zeros before you get to the actual integer. This is the value of the dollar over time. So it was pegged to gold right there, and then it has dropped all the way. So what does this mean? If we now price the S&P 500 in gold, what are we expecting to see? Well, in the S&P in dollar terms, as you can see, has done nothing but go up. And of course, stocks are productive. These are companies that are investing capital. They're producing things in the economy. So you should be expecting them to increase in price over time. Makes sense. However, if you price the S&P 500 in gold terms, you see that it goes in cycles. It goes in waves. So we call these boom and busts. So there are times when it goes up versus gold, and there are times when it crashes down. Times when it goes up again, times when it crashes down. So the way to read this chart is, you need 2 ounces of gold to buy 1 share of the S&P 500. And it's now at the same value as it was back in 1961. So in 1961, 2 ounces of gold would get you a share of the S&P 500. Today, 2 ounces of gold will get you a share of the S&P 500. And you can see that it is practically I don't want to go into the technicals. There's a way to read charts, but it's practically at overvalued territory, the S&P 500. But people keep piling their money into this through pensions, through retirement funds. And yes, I understand the logic behind compound interest. I'm well aware of Warren Buffett's famous quote that compound interest is the 8th wonder of the world. And that is true. However, Looking at this chart, you can tell that the S&P is set to lose a lot of value over time. I mean, look at that. It is probably going to be dropping 70% against gold. This is not financial advice, by the way. This is just me reading charts. It is likely going to drop about 70% price in gold in real terms. And looking at what's going to happen to currencies in the future, it's going to be bad. It's going to be bad. You want to be getting out of currencies. Currencies are essentially debt. They are backed by treasuries. And the treasury market, and it's not looking too good because the yield on bonds are skyrocketing, which means that the bonds are losing value, which means that the currency is losing value. Governments and central banks will eventually have to print money to buy their own bonds, to buy their own debt. And when that happens, it's lights out. It is lights out for the currency. So just so you guys can see, maybe at a grander scale, you can see the ranges. Yes, over time, by and large, the price of the S&P goes up and to the right. Yes. However, the cycles are long. This is a monthly chart. This is a monthly chart, guys. So going from this bottom here in 1980 all the way to the top, it took 20 years. Or let's say it took, to get to the previous all-time high, it took 10 years. So for 10 years, in real terms, you were in the red. For 10 years. The average career is 40 years. Have you got 10 years to spare in the red, in your investments, in your pensions, in your retirement funds? Have you got 10 years to spare just to get to just to get back to break even? Listen, it's not just the S&P, the Nasdaq. I believe the Nasdaq is the NDX. Once again, this is the tech stocks, so the Magnificent Seven. This is your Apples, your Teslas, Microsofts. Once again, up and to the right. However, the Nasdaq priced in gold, you will see a very similar trend. It also comes in cycles. In fact, the Nasdaq hasn't even reached its all-time high back in the dot-com bubble. You can see that it is very much still below that. It is at the same value as it was back in 1999. Now let's look at it in everyday terms. So first up, we're going to look at food. If you price food in gold terms, you'll see that food is actually down. So food has gotten cheaper if you hold gold over time. This chart goes from 1961 through to, what is this, 2016-ish, and then from 1990 to 2025. So this is basically to today. And you can see that food is going down. However, in fiat terms, in dollar terms, pound sterling terms, it is up. This is because the value of currencies is going down. As value of currencies go down, the prices has to go up. I've explained this in previous videos before, so if you have watched those videos, you probably understand by now. Crude oil, down against gold since 1960. What else have we got? What would be a good one to look at? Home prices. We know that prices of homes have skyrocketed in dollar terms. The green, I believe, is fiat currencies, and the blue is in gold terms. So in gold terms, it's flat. A house is a house. You haven't, it sounds logical, right? There aren't any gizmos or anything that has made the house more valuable. The house is a house. It's the same way as an ounce of gold is an ounce of gold. It's not more special after 20 years. It is what it is. So there is no reason for it to be like 7 times more expensive. It is because currencies are losing value. What else have we got? Let me look at, I think there's UK homes as well. There we go, UK house prices for those of us in the UK. Once again, level. If you hold gold over time, it secures your purchasing power. That's what gold is for. I mean, I wouldn't say gold will make you wealthy. It is meant to protect your purchasing power, which I think is more important than ever with the cycle that we're about to enter with massive currency debasement. Another look, stocks versus gold and silver. Since the beginning of this century, gold has in fact outperformed the stock market. I mean, like we saw in the chart earlier. So gold is up since the beginning of the century, about 8.8 times. Silver is up 5 times. The S&P 3, Dow Jones about 2.8 times. But you're like, wait, but what about dividends reinvested? Okay, let's do it. Dividends reinvested, including dividends, 01/01/2000. Gold is still up against the stocks. I believe the black is the MSCI USA. Okay, so gold 8 times, the MSCI USA 5 times, silver 5 times. So it's very similar to stocks, but an ounce of gold is an ounce of gold. I'm going to read an excerpt from a book called When Money Dies. It follows the hyperinflation period in Weimar Germany. This was around the 1920s after the World War I, and this was before World War II. So it's that period, I believe, between 1919 and 1930. That's what this book is referring to, because Germany had to pay back so much of their war reparations, and it ended up, and they basically printed money to make these payments. So let's read. A few of the financially sophisticated could be heard blaming the government and the finance minister in particular. But the typical view was that prices went up because the foreign exchange went up, and the exchange rate went up because of speculation on the stock exchange. And this was obviously the fault of the Jews. Now, you do tend to see this. There's a theme that goes on throughout the book where Jews end up being blamed for a lot of the financial issues. I don't really care about what your beliefs are. I don't care about, I mean, if you're Jew, if you're Christian, if you're Muslim. This is not a religious thing. This is a monetary phenomenon. Inflation is only a monetary phenomenon. I couldn't care less who's controlling the money. As long as it's backed by gold, it doesn't matter who's controlling it. So, reading on. Although the price of the dollar was a matter for almost universal discussion, it still appeared to most Germans that the dollar was going up. So the mark was a German currency at the time. So their belief was that, the dollar is becoming more valuable. But actually, it was the mark that was becoming less valuable, which is the same thing here. It's not gold becoming more valuable. It is the dollar, it is the pound, it is the Aussie dollar, it is the euro, it is the yen, it is the yuan, becoming less valuable. The price of food and clothing was being forcibly increased daily, not that the value of money was permanently sinking, as the flood of paper marks diluted the purchasing power of the number already in circulation. I've talked about this being M2 is the equivalent of M2 today, the US M2. So that is essentially the same as the banks now, the government's diluting the paper currency today. Going on, the krone. At the time, Austria and Germany were quite closely linked. Their economies were quite linked. So whatever was happening in Austria was also happening in Germany. So the krone is the Austrian currency. Reading, the krone at 25 Swiss centimes the previous Christmas was now quoted at 1/12 of a centime. So it lost 1/12 of its value. Her stock shares, however, were going up. Gambling on the stock exchange had become the fashion. The only way to avoid losing all one's money was perhaps to add to it, to the stock exchange, which is what people are doing now by investing heavily in retirement funds and pension funds, in investment funds, in index funds that put money into the S&P 500. It's not going up, guys. In real terms, it is not going up. It is the fiat illusion that makes it seem like it is going up. It is paper wealth. And I believe this final one is, stocks don't protect you as well as gold. Reading, all who were not clever enough to hoard the forbidden stable currencies. So at the time, they called the forbidden stable currencies basically the dollar, because holding dollars automatically meant that people were not holding marks, which meant that marks were losing value. So it was just a death spiral, basically. All who were not clever enough to hoard the forbidden stable currencies, all gold, without exception, suffered losses. I'm going to read that again. All who were not clever enough to hoard the forbidden stable currencies, all gold, have, without exception, suffered losses. My millions have dwindled to about 1,000 new shillings. We belong to the new poor. The middle class has been reduced to the proletariat. The proletariat is the working class. More fighting, daily, repeated, exasperated, demoralizing, offensive and defensive fighting of man against man. This is what we've seen a lot today. I mean, we've seen a lot of protests in the UK around like immigrants coming in and people not being too happy about it. But they don't understand. They do not understand. It is not, well, yes, there's also an issue with that, but once again, that's for another day. It is not necessarily an immigrant issue. It is a monetary issue. They're printing currency. They're devaluing the currency you're already holding. So please, I encourage you, if you haven't already, look to buy some gold, some silver as well. As you saw in the chart earlier, silver actually has been outperforming the S&P and and the Nasdaq since the year 2000. Silver. So grow and protect your wealth. Please invest in gold. In the UK, you can look into the sovereigns and Britannias. They are capital gains tax-free silver as well, although silver comes with a 20% VAT. I will do a future video specifying how to actually invest, how to buy it. It is very simple, guys. It is like buying something on Amazon. If you are in a hurry and you don't want to wait for that video, I did touch on it a little bit in the video where I talked about why you should stop saving in currency. So please check that out. It is towards the end of that video, so you can skip through it. I do encourage watching the whole thing, but if you're in a hurry and you just want to buy some gold now, you can skip towards the end of it. I hope it has shed some light into the fact that the fiat currency presents a bit of an illusion to stock prices and stock performance. It is not stocks necessarily going up in real terms. It is the dollar going down. Also, it is not gold going up. It is the dollar going down. I say dollar, but it's like a catch term. It's really a catch term for all currencies. All currencies are going down against gold. I'm just going to go through like a final bonus. We're going to look at gold in lots of different currencies. So this is gold in the pound. Even worse than the dollar. Gold in the pound. It is practically going vertical. We're going to see gold in euros also going vertical. Gold in the Chinese yuan also going vertical. Gold in the yen, I think that's JPY, going vertical. Gold in the Canadian dollars, vertical. Gold in Aussie dollars, vertical. Currencies are sinking. They are all sinking. It is the Titanic. Get off the Titanic and into the lifeboat, gold and silver, or the lifeboat of the financial crisis ahead. So, thank you guys once again for watching. I will see you in the next video. Peace.